We're all guilty in this, and including myself. We tend to separate ourselves from them. We tend to separate our dreams from the reality. And I see it as a glass ceiling on top of our heads, which separates us from our next big step, which we kind of see, but we hesitate to take. And it can happen to an employee who hesitates to quit their job in favor of a startup, or it can happen to a student who hesitates to approach that girl because she's from a different league. And that may sound familiar to John because that's how he met his wife, Jane. And people like John, individuals like John, they are less likely to have that separation on top of them. And once he said that your biggest enemy is the fear, and you have nothing to fear. And that's why I like his personality so much. He dares. Okay? In 1982, John dared, after graduating from UC Berkeley, to immigrate to Israel and leave California, joining his father to work on a fiber optic startup, a company which they called Medved. And they raised capital, sold that company in 1990 to Amoco, which eventually merged with BP. In 1995, John dared to risk with $2 million of his own capital and started in his garage Israeli Seed Partners Fund, which eventually, through 4 funds, raised $262 million and invested it in 60 companies, bringing 13 of them to successful exits. In total, John had 14 companies valued over $100 million each. Then he dared in 2006 to co-found and lead as CEO to successful completion of its IPO on New York Stock Exchange, a company, social mobile apps company called Ringo. After that, his reputation was okay. It was excellent. The Washington Post wrote about him that John was one of the leading Israelis high-tech venture capitalists. New York Times said that John, one of the top 10 most influential Americans who impacted Israel. So people started approaching John and asking him to get them into a deal. And he wasn't looking for a need, nor was he looking for a new adventure, but the need came to him. And he realized that IPOs happen late today. Look at all those companies which are worth billions now. Airbnb, Uber, Snapchat, they're not public. You can't invest in them, even if you wanted to. Even if you have money, and you take a $10 million check and you go to Sequoia Venture Capital Fund, they won't take it. They don't need your money. So what do? You go to John. John had this idea of OurCrowd, allowing accredited investors to co-invest on the same terms as the big boys do. So imagine having a stock in Pinterest on the same terms as Horowitz does. It's impossible. It was impossible, but it is possible now thanks to a venture of John. Some call it a Kickstarter for millionaires. Some call it the crowdfunding for real investors. But the idea is simple. It just allows accredited investors to co-invest again into those deals, access to which was impossible before. It's now the leading crowdfunding platform in the world. It grew to over 100 employees, according to today's statistics, 106, and invested $300 million in over 100 companies. John recently raised a fund of $72 million to grow his business. That was actually the reason why we had to delay our previous event in September, but we won't wait any longer. John is an incredible individual who I'm proud to have here today. He dared to set a goal of having 100,000 investors on the platform, investing $1 billion with him each year. Ladies and gentlemen, let's give a warm startup welcome to the man with no limits, John Medved. Lovely. John, shalom, John.
Shalom to everybody. That was probably the best intro I've ever gotten. honestly, and the fact that you did that completely, off the cuff with remembering the numbers, you didn't estimate that you got them right. By the way, before we get started, I think apropos to what Oleg said about helping people, I'm going to do my one help now. I just met a guy who seemed like a really good guy. He's standing up over there. You raise your hand. This is Alex. Alex is a web developer and software developer who seemed pretty smart to me, and he's looking for a job. Now, there are a bunch of startup, both investors and startup people here. Talk to Alex and help him get a job here in Halifax. So now I've done mine.
Thank you. I'll just, listen, it's incredible to have you here. I'm really excited. And the point of this interview is just to get you to talk. So if you feel like I'm asking one question and you talk for an hour, that's fine. Okay? All right, so recently you had that round of $72 million, which you took to grow your business. And maybe you can elaborate on how it went and maybe on the structure of OurCrowd, because it's not trivial how the money comes in and goes out of your company.
Okay, so what I'm doing now at OurCrowd is something called equity crowdfunding. And most of you are probably familiar with regular crowdfunding, which breaks down to a couple of categories, but the one that we're most familiar with is what's called reward-based, which are things like Kickstarter and Indiegogo. You get a great idea, you want to build a new gadget like a Pebble watch or something, and then you go to the crowd, and the crowd sends you money. That's great finance, by the way, because you don't have to give anybody any stock, right? As the backer of that kind of a project, you don't get any upside. You get, if you're lucky, the product. That's not what we do. We also don't do donation crowdfunding, companies like GoFundMe and others that will help raise money for charities. We're very committed to charity. We can talk about it later, but we don't do that. What we do is that we find cool companies that are essentially either already venture-backed or going to be venture-backed. And then we take an allocation in a syndicated round, which we will either lead as the lead investor, and we do that about 60% of the time, or we'll follow. And then we open that up to OurCrowd, which is a group of people who unfortunately is limited at the moment to something called accredited investors in Canada. It's sophisticated or qualified investors. These are people with money. Because our minimum investment is $10,000 for a given deal. We have structured portfolios and now funds that you can get into for $50,000, but this is not for everybody. You got to have at least $1 million of investable assets, otherwise don't do this. And I've been quoted as being a little bit weird going to investor events where someone gets up and says, wait, I want to invest in 2 or 3 companies on your site, and I'm going to choose 2 or 3 really great companies and put $10,000 each into them. And I say no. And they look at me and say, well, what do you mean no? You're raising money is what you do. And the answer is no, because that's crazy risk. You've got to build portfolios. If you're going to do the startup game right, you've got to invest in 10 or more companies. So we have the way to do that with $50,000. If you go to 50, we'll give you a $5,000 bite size. But if you can't make that kind of a commitment of $50,000, either through us or others, don't do it. Save your money, put it elsewhere. So our idea was to not give the crowd sort of second-rate deals. Because I think people's assumption would be, well, look, the really good companies, they've got to get venture capital funding. It's not going to go to crowdfunding, but we're changing that. We're investing alongside Andreessen Horowitz and Vinod Khosla and Excel and Sequoia and all the biggest and the best funds in the world. We're getting our people into these deals. Now, we started in Israel about 3.5 years ago, and we weren't sure whether it was really going to work, right? Would people respond to a deal where it's up on the internet, essentially, where on your mobile phone you're looking, at a deal, you're discovering it, you're watching a webinar with a great entrepreneur, and the next thing you know is you're pushing a button and you're committing $10,000 or $50,000 or sometimes $100,000. I can tell you the first night when it was very early, when somebody we did not know went into our site and pushed the button. The first push was for $50,000. We were convinced that someone was pulling our leg, right? Like, who's going to do this? We had the idea, but the reality was sort of like a little bit strange. And all of a sudden, next morning, we called the person, and he said, yeah, that's me. I'm in there because we have to do KYC. Money came, and away we go. So we're now up to about 15,000 investors, a little over that, worldwide from 110 countries. We've deployed $300 million this way and into 100 companies. We've had 10 exits, by the way. That's the thing we're most excited about, is that we're not only deploying money, but we're actually making money for our investors, and both IPOs and M&A transactions. So we have to raise money, though, for our platform, because we're still not break even. It's going to take time until the fees. Our business model is that we take a 2% management fee on the money you invest for a maximum of 4 years, so that you'll invest in a given deal. We'll take 2% of what, if you put 10 grand in, we're taking $200 for 4 years. This is venture economics, and then we take 20% of the upside. So if we make you 10 times your money, we'll take 20%. Actually, over 5x, we take 25. Full disclosure, we feel we deserve it at that point. So yeah, it's fair. And that's what we do. So we just raised $72 million in a Series C, because we're a startup too, and half of that money goes into our operation, and half of it goes to put GP, or the general partner's money, into each and every deal. So that if we're putting a deal out to the crowd trying to raise, call it $2 million, it would be something called chutzpahdik, or chutzpah, if you know that Jewish word, which means unbelievable gall, okay, or cheekiness, to ask you to put money in if we didn't put up our own money. So we put up roughly about 5% of the money that's invested into each company according to a formula. So that's what half of that money went for.
Okay. So to bring you back to that moment where you said that guy invested 50 grand.
Yeah.
Would you say that OurCrowd is a marketplace where you have deals on one side and then investors interested?
It's a marketplace with deep curation. We're sitting here in a art gallery. Perhaps the word curation is appropriate, because this is not a marketplace, right? You can't just be an artist on the street and say, I'm going to go put my piece of work up on the wall here at the Nova Scotia Gallery. You have to go through a whole process and be selected, and that's what we do at OurCrowd, so that we see about 100 deals and select 2. So over the last 3 years, we've seen over 5,000 deals, and we've selected 100. And we hope to maintain that ratio, actually make it tougher. So we're seeing more and more. By the way, in the last couple of hours since landing on the flight from London, I haven't seen them, but I've heard about 10 different deals here, and I am blown away by what you guys are doing up in the Maritimes. I mean, who would have thought? I mean, first of all, a lot of kudos to Oleg, who is a force of nature. Okay. I remember when I got the email saying, would you please come and speak to Startup Grind in Halifax? Now, I'm pretty well educated about geography. I'd never been here before. I knew it was somewhere up there, okay? I grew up in California, so the East Coast is already far away, and the northeast of Canada is really far away. And my assistant, I get a lot of requests to speak, and we sort of triage them, right? And she said, well, this one is a no, right? I said, but it's written sort of interesting. Well, let's talk to the guy. And then we talked, and once you're talking to him, there's no getting away from him, okay? I'm sorry, I had to come, and he was very, very kind about letting me off the hook for the first gig, because of we were closing the round, but I'm really delighted to be here. And now I forgot the question. Marketplace. So we're not a true marketplace in the sense that you have to be selected to get onto the OurCrowd platform. But once you're selected, then the investors get to select what they would like to do. They can choose an individual deal, or they can choose, portfolio structures that we have that are either managed with fund managers or those that we help you select your own.
Okay. So I asked that because some entrepreneurs here might be building something that is related to marketplace. So I was just curious, how did you solve that problem, chicken and egg problem, in the beginning? I know that you had those cards of individuals who were interested to invest, and that's may given you some traction, but maybe there's some rule of thumb or something that...
Yeah, I mean, look, in the marketplace business, it's always supply and demand, and it's always push-pull, and you're always worrying at one point about one and the other point about the other. So, Uber's figured out that their big issue was drivers. It wasn't people going to use their service. It was, can you get enough drivers? Our big issue in the beginning was not investors. It was product. It was companies. And I remember the first meetings we had with companies, and you'd be surprised. You think companies, they always want to, take money, but we wanted good companies that were venture grade, and we sat down with these guys and we said, okay, here's what we're going to do. We're going to sit and we're going to diligence you just like venture capitalists. We're going to run you through the ringer. We're going to call your customers. We're going to check your kindergarten teacher, all this other stuff, okay? And then we start the crowdfunding. And they looked at us like, what? I mean, you don't have a bag of money under your desk that once I've gone through this process, that you're just going to give me the check, you're going to then run me through a whole... I said, yeah. So that was hard, okay? And they said, by the way, you guaranteeing that you're going to raise money? No, because the crowd. The crowd doesn't like the deal, they're not coming, and there's no underwriting process here. So that was hard. But then all of a sudden we started getting the companies, and then we needed the investors. So, the investors, how do you go get investors to do this? Turns out that, yeah, you build a marketplace online, but you have to find ways to prime the pump. So for us, it was a lot of face-to-face and partnerships and whatnot. And everybody goes through this, right? Everybody who builds those kinds of systems, they're worrying about supply and demand. And right now, we're pretty balanced. We're getting ready to do some really cool things on the demand side, where we're taking the product and we'll be distributing it with partners, so people will be able to get OurCrowd products, if you will, or investments through their wealth manager or through large banks, and you'll start seeing that in the not too distant future. But we're constantly trying to figure out, how do we do this at scale? Because what works in a small environment doesn't necessarily scale infinitely. And in particular, venture capital has been this boutique-y little industry where small is beautiful. And one of the questions that we have, and many of our investors, how big can you get? We've been doubling every year, and we think we can double for many, many years to come. But as we do so, we have to really develop tools and methodologies that will enable this, because it's not just about giving money to companies, because the companies need a heck of a lot more than money. The companies need connections and guidance and introductions. And so we have a real opportunity here, because we're helping companies to get part of an international network of 15,000 added value investors who can get you to anybody you need and can really provide a force multiplier. So that's cool, but how you make that work on an ongoing, scalable manner is going to be a nifty piece of work.
Yeah. And you've been a couple of times an entrepreneur, you've been an investor. Who are you now?
I'm both. Look, this was my own private mashup. As you said, I've been in this game for over 3 decades, and on both sides of the table, as an investor and as a startup person, as an angel, as a venture capitalist, been a CEO of public companies and private companies. And I wanted to do something that was both be an investor and be a startup person at the same time. And so I figured that, the venture capital industry hasn't changed in 50 years. I mean, we invest in different things, but the actual science of venture is the same. It's the same 2 and 20 economics. It's the same sort of, funds get bigger and smaller, but it hasn't changed. And what's horrific about this is that A, there's not enough venture capital out there for startups. and it's very unevenly distributed. Okay, it's, first of all, geographics matter, location matters. If you're in Silicon Valley or Israel, you get funded. If you're elsewhere, you're pretty much screwed. Okay, and as you guys know, I mean, on the other hand, you're developing here an interesting ecosystem, but it gets to be tough when you get to Series A or Series B, and you've got to go persuade a venture capitalist to come fly up here and see your company. We invested early in a great company out of Cleveland, Ohio, called Surgical Theater. These are guys who do virtual reality for brain surgery. They let your brain surgeon actually take sort of a fantastic voyage, and this dates me back to that famous Raquel Welch movie. I was more interested in her costume than the actual brain. But in any event, a great company. We were on the phone with these guys, and in the first call, and I remember I asked them a question. I said, well, this sounds almost too good to be true. Have you spoken to other venture capitalists about joining this company and around? They said, yeah, well, we have all these talks with VCs, and they sound really good and interested in the beginning. And then they say, remind me where you guys are located. And they say, we're in Cleveland. And they'd say, well, at that time, we could almost set a stopwatch, and you'd realize that the call would not go more than 5 more minutes. And they'd say, we'll get back to you, and you'd never hear from them again, because the investors just didn't want to schlep out to Cleveland. And so geography is an issue. That will be solved by platforms like OurCrowd. We've done 70% of our deals in Israel, 30% outside. We're investing in Australia and the UK. We have already 2 deals here in Canada, which are wonderful companies. A company called Wave and a company called Influitive that are both really on fire. And we're looking for more deals. So I think that's one of the problems. The other problem has been that investors can't get in, right? As you said before, you could be someone of great wealth and fly to Silicon Valley and go up and down Sand Hill Road waving $10 million checks, and they're not taking your money. They don't care. They don't want your money. And as a client of a small wealth management firm with $1 million or $2 million to invest, and you're reading all these stories about 0 to 20 billion, like you take Jan Koum, okay, who was a nice Jewish boy from the Ukraine who showed up in America. It didn't go so well for him originally. He was on food stamps. And then he came up with this idea for a weird company called WhatsApp. And within 2 years of his being on food stamps, he was selling the company for $19 billion, to Mr. Zuckerberg and company. And how come we don't get a chance to do that? None of us do. The bottom line is that, people who are connected, who are part of that group of maybe 1,000 people, okay, who are the connected people. If you're part of 100 lucky funds, yeah, you get a shot at some of these deals. But the vast majority, even of the rich people, can't do this, and this is unacceptable. This is not going to work anymore. We want in, okay? We want to be able to get access to those kinds of returns, and the entrepreneurs need more money and need the help and need a different way, or an additional way of building the company. So that's what's driving the sort of the vision.
Yeah. If you started talking about your portfolio companies, you have incredible portfolio companies. Yeah. One is Reebok, which was the first IPO, right, in the crowdfunding history. And another company is Consumer Physics, yeah, which, like I told you, my clients, so you know where your money is going to. Consumer Physics is inventor of this small thing which I have here. It's a pocket spectrometer, and spectrometer basically means that it can show you a chemical makeup of anything that you point it at. So it can show you what this metal is made of, or if the watermelon is sweet enough. So while you shop, you can know everything before you buy it. So I wanted to do just a little test here. I brought the chocolate. It says 70% cocoa. So while you tell us about the company, how did you discover that deal, and why did you decide to invest in it, I'll just run a small test. I'll open this chocolate and...
Please.
Okay? All right.
So this was a wild idea that, we like wild ideas. Some companies focus on investing in marketplaces or social this or things that are obvious and interesting. I've got a particular soft spot for the hard stuff. Okay, I think that the next round of innovation is not going to be in the soft stuff. It's going to be in this stuff which is really difficult. It's going to be in drones. It's going to be in ag tech. It's going to be in water. It's going to be in robotics. It's going to be in medical devices. It's going to be in big data and cybersecurity, stuff that requires deep technology. And by the way, I think you guys are well placed, because when you think about all the big data stuff and the ocean stuff that your guys are doing, you're not only sort of social stuff. To the extent you're doing it, you're doing the analytic part right up here, which is hard. So these guys came with this idea. I mean, literally, they did not have this little prototype device. You got the results?
72.
72%. That's pretty darn good. That's wild. The fact that you can take this little device and it'll tell you what the percent of cocoa is. I mean, and by the way, it will also tell you how much body fat you have, or, it's quite serious for me, and we're not testing tonight. But it will tell you on the tomato, there's a thing called the Brix level, which is, is it a better tomato or not? And this is going to change the world. But these guys came to us with this idea, and they had been to see a bunch of venture guys, and they all said, look, spectrometers are $50,000 minimum instruments, big desktop things that are used in factories and heavy industry. How in the heck are you going to get it so small? And I remember we took this to about 10 different references, people to take a look at the deal. And the majority of them said, save your money, don't invest it, it's not going to work. But about 3 of them said, this might actually work. And that was enough for us, because we figured that the payoff, we were investing initially at a little over a $3 million pre-money valuation. We figured that if there's really some kind of a chance for this thing, a reasonable chance, not a majority, of it to work, we're going to make a ton of money. So we invested the lordly sum of $325,000 in the very first round, together with a guy named Dov Moran, who invented the disk-on key, the thumb drive that we all use today to move data. It's a company out of Israel. And the rest is history. Look, these guys are still very early. Okay, they have a lot of work to do. But this is wild. They're now taking it. It's getting so small, it's going to be in your phone. Next year, my prediction, I'm not making a commitment because I don't run the company, we own a chunk of it. But next year, my prediction is that you will see this product functionality in your smartphone itself.
So what would you recommend to a hardware company like this? The obvious options are, of course, Kickstarter, because you pre-sell the product and you don't give away any equity.
And by the way, they did both.
Okay, yeah.
One of the things which is great about consumer physics is they did crowdfunding for equity with us and crowdfunding on Kickstarter, where they pre-sold it, and they got about $3 million there. We've invested over $5 million now in total into the company.
Right. And you also once said that for you it serves as an indication that it's something of an interest. So what would be the obvious options? The Kickstarter, then the professional crowdfunding like OurCrowd, maybe venture funds?
Absolutely.
Or do it yourself. So the YC call it like a miracle, how do they call it? Pulne Meraki. So you can actually assemble something yourself as a prototype. So what option should they choose, at what stage, at what situation? Maybe you can suggest something.
Okay, so first of all, today is a great time to be raising money. If you have an idea and you've thought about being an entrepreneur, don't wait. Do it today, okay? It really is, it's not, it will get better, will get worse. Today is about as good as I've seen it in terms of certainly raising money for seed ideas. And it sounds like even here in Halifax, there are a whole variety of government and private funds and incubators and accelerators and angels, and it's out there. Okay, you got to just go for it. whether or not you go to an accelerator or you go to a venture fund or you kickstart your program or you go to OurCrowd, my answer is basically all of the above, okay? Because first of all, not everyone was created equal. It's really important for you to choose your investors, whoever they are, from whatever variety or flavor, well, because it's sort of like getting married. It's getting married knowing that it's not going to be the rest of your life, okay, but it's going to be a big chunk of your life. And you better like that person and be able to work with them. And what I find all the time bizarre is that investors will check the hell out of you, right? They'll sit there and ask you questions after questions and calls and references. And do entrepreneurs ever check out their investors? The answer is never. They're so excited. Oh, they're going to give me money. I'll just take the money. And it's a huge, huge mistake. Okay, you got to get on the phone and call their other, they say, well, we do so much. We got all these great companies. Pick up the phone, call some of their CEOs. Is this guy deliver? Are they decent? Do they live up to their word? And, you just got to do the same diligence on them. And by the way, if the fund is insulted, when you say, I'd like some references on you, and they get insulted, say, who are you? What do you think? Then run away, okay? Because that's not the fund you want giving you money. You want to do the same kind of, don't be obnoxious about it, but be serious about it, because that's critical. So I'm less sort of committed to one of those paths as opposed to another than I am on you finding the right thing that works for you. So,
what kind of relationships do you have with the founders?
Deep. And this in the Jewish tradition, we read from the Bible, the 5 books of Moses, every year in a cycle, and it's called the Torah portion. And we just started our cycle again at the end of our high holidays, and this week we're reading Genesis, the first chapter of the Bible, and there's a description of Adam and Eve, okay, in there, and when they describe how Eve and Adam were put together, the Bible says that Eve was an Ezer Kenegdo, which in Hebrew means, in English, the King James translates it as a helpmate. Bad translation. Okay? In Hebrew, the Ezer Kenegdo means a help against you. Ezer is help, Kenegdo is against you. And you say, what does that mean? Well, anyone who's been in a good marriage knows exactly what that means. Okay? In other words, you don't want somebody who just says, oh, I love you, you're wonderful. You want that full body check. Okay? Sorry, honey, this isn't going to work. Okay, you need somebody who's both got your best interests at heart, okay, who loves you dearly and, believes in the vision, but is really not going to tolerate any BS, okay, and you can't lie to that person. So that's the relationship, even though we're not having sex and we're not, we're not in this for life, we're in this to build a company and to make some money and have some fun. But you want that kind of a deep relationship of an Ezer Kenegdo with your founder.
Totally agree, and that's why probably I still don't have investors of those who marry late. Get married late. So 1 year ago you said that in Canada you've got a classic good problem for people like me, which is too little money chasing too many deals. And that's why things are so cheap here. Your valuations are on the floor relative to Silicon Valley, and I find that pretty attractive. So first of all, welcome to Atlantic Canada, where valuations are even lower. But how can we see some deals done by OurCrowd here? From our previous meeting, something might happen here, but what can we do, and what are you looking for maybe in the companies that you invest in?
Okay. First of all, we will do deals here, more. We've already done 2 deals since I think I gave that interview. In Canada, we'll probably build a Canadian fund within OurCrowd. We are going to be big players in Canada because it's just the quality of your entrepreneurs and your technology is so way ahead of the capital formation that's investing in you that this is a great opportunity for smart money, and we view ourselves as smart, and we want to extend our exposure to Canada, and I'm now discovering Atlantic Canada. I heard of a couple of deals today that got me excited. I won't mention which ones they are yet because we haven't done any work, but just on the surface they sound quite interesting. When we look at a deal, the first thing we look at is the quality of the people. It's always, if real estate or restaurants or location, venture investing or startup investing is people. Okay, because when things go wrong, at least in my country, it's usually not about bad technology or about a bad market, buy. It's because people act weird. They start fighting. They're greedy. They lie. People are people. Okay, so you've really got to look at the people. And we have a preference for serial entrepreneurs, people who've been there, done that, and succeeded. But, and by the way, their odds are much better to give you a return. They won't build the biggest companies. The very biggest companies in the world are built by first-timers. Look at Mark Zuckerberg, Steve Jobs, Bill Gates. Young people who are passionate will build the biggest. But we look at the people. Second thing we look at is the market opportunity. If it's a little niche-y thing, it might make a good business, but it's not going to give us a venture return. So for us, it usually means billion-dollar markets. If you're not addressing a big enough market, we're not going to be interested. Maybe somebody else who's more of a specialist might be, but you really got to make sure the market size is there. The third thing we look for is this special product differentiation or technology brilliance, something which is not just me too, okay, that really, like what they did with this SIO spectrometer. Fourth thing we look for is a syndicate. We don't like to invest by ourselves. We will, but for example, in this case, the fact that Dov Moran was there made us feel better. We were followed by Vinod Khosla, which made us feel a lot better, and now a host of others. But we like to invest. It's a group sport. We like to have other people around. We want traction, okay? We want the company to already be moving forward. Venture people like to jump on a train as it's moving out of the station. We don't like to get on the train while it's just sitting there, okay? We want it to be, picking up steam. We want to see that. And ultimately, we're very valuation sensitive. We don't like to overpay.
Okay. In 1973, you returned to San Francisco Bay Area 1 week before Yom Kippur and saw all the campus washed with anti-Israeli sentiment. So you became activist before you became a venture capitalist. And now there's that global movement of BDS. It's a movement which calls to boycott Israel and everything that is produced in Israel. So how do you see that? Does it influence you at all? And what would you say to someone in the audience who might get exposed to that at some point?
Really good question. First of all, I'll just relate a story. I won't tell the name of the person, but we were sitting at my table on a Sabbath evening. On Friday evenings, we have big meals, lots of scotch and good wine and family. And I have often a lot of interesting, Jewish and non-Jewish guests who join us at the table. And we happen to have a very, very large hedge fund manager. And there was a very prominent member of Israel's parliament who was sitting across from him. He turned to this big hedge fund guy and said, "Well, what do you think of BDS?" He says, "What?" He goes, "What do you think of BDS?" The guy says, "What's BDS?" He'd never heard those three. I'm going to ask a question. How many of you had heard those three initials before tonight? Okay, how many had not? Okay, so the majority here had not. As Jews and Israelis, we're very sensitive to boycotts. Okay, my mother and her family fled, thank God, from Nazi Germany in 1933 because my grandfather's candy factory was subject to a boycott. Okay, when we hear boycott, we get really freaked out. Okay, because we've got memory. So the Jewish community has gotten like obsessed with this. The reality is that most people don't know what the hell's going on. And the boycott is having zero impact. Zero impact. The rest of the world, by the way, if you look at what's going on in Asia, they are in love with Israel right now. Okay, China, India, Korea, Japan. We are awash in Asian money, which is flowing in like crazy. They don't have a history. This is just not of interest to them. There are a few crazy people who believe that the way forward is to punish the Jews. I mean, I don't get this. Look, we have to be on the guard, but the answer is not divestment, it is investment. If we're going to have peace in that part of the world, it's going to be because Israel and its neighbors are going to trade technology and learn how to make money together. I mean, look, some of the interesting things that are happening now are that the Saudis have all of a sudden started showing up in Israel openly, right? There are, businessmen and generals who are, you never dreamed that stuff was going to happen, who are now already talking about business. The trade between Israel and the Arab countries is going through the roof. Whatever these boycott guys are doing, maybe we should just do more of it, because the trade just keeps on going up, right? The actual investment into Israel has gone up, just to give you data, in the last 3 years from $2.2 billion in venture investment in 2013 to this year it'll be close to $6 billion. By the way, to give you just a data point, I was in the UK this morning, and in the third quarter, there was 68 million pounds invested in UK venture. So multiply that by 4, we're about 20 times now the UK apps. We're not talking per capita, we're talking absolute investment. So investment into Israel is booming at the moment, and I think that's good. One of the big things that's happening in Israel now is more and more Arab entrepreneurs are getting involved. And we're looking at deals being founded by Arabs, and we're trying to get that community more active in the startup nation. We also have to get Haredim, who are the ultra-Orthodox Jews who don't get the same kind of training in secular studies. We've got to get them active. And then there's a worldwide problem of women. Okay, we don't have enough women entrepreneurs and women CEOs and women venture capitalists, and we are hunting women deals. So I see a good number of women in this audience. Go at it, girls. Okay, we need this. Okay.
And I know that you're, wild promoter of women, of minorities, and in OurCrowd you're trying to fix that. I think that you're one of the only venture capitalists having women, maybe just a few more. Recently they hired just one woman, and they are proud of it. But I really chapeau to you guys. And the reason I ask this question is because I'm doing my startup, and I just saw it at Dalhousie University. Most of the student union there support BDS. So it caused me problems as an Israeli because I have Israel on my business card.
So on my next visit, let's go do a talk like this at Dalhousie University.
Yeah.
I'd be happy to do that and talk about what's going on in Israel.
Yeah.
Bring it on.
Excellent. Thank you so much for being with us.